What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 26th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are, and in today's video, we've got a lot to talk about, but I mainly want to discuss why I think it's time right here, right now, to start being a bit concerned about a potential recession coming around the corner with continued growth and fear around COVID-19 or the well-known coronavirus. Now, before we dive into the details here, guys, we've got a lot to uncover. I'm going to be talking about a wide range of markets, from not only cryptocurrency markets to stocks and also commodities, and just get a brief overview as to why on the fundamental side this could spark a recession without trying to get too caught up in the emotions or the over-exaggeration, and then also talk about the potential risks as well of COVID-19 continuing to spread and where we're seeing the value go in markets and where I think it's going to go long term. All right, so we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone, so let's go ahead and start by taking a look at cryptocurrency markets. As always, I usually like to start with crypto because it's most relevant to you guys. I think everyone has seen across the board that crypto markets have been quite dull over the last 3 weeks. We've closed down not only on a lot of Bitcoin's price action, but along with that, a lot of altcoins are losing value at a pretty rapid rate as well. In many cases, it's double-digit territory for most of these altcoins in the top 100. So it hasn't been pleasant to see. I can agree with pretty much anyone. I think it feels a little bit like a kick in the head in this case after such a great long winning streak here for altcoins. But we'll talk a little bit, in the sense of Bitcoin's price here real quick, just to give you guys some context here. I'd originally planned to talk about it later, but I think, again, you guys want me to probably focus on crypto markets first. So going on here to take a look at cryptocurrency markets. If we take a look at the last 3 weeks here, again, diving into the daily here, we've gone from around a price range of around 10,500 down to 9,100. Now, for me personally, this isn't something that's got me really concerned. I think Bitcoin's actually holding up quite nicely. And after going from $6,600 to, 10,500, this is pretty expected, guys. Not to mention as well, this has been a general range of resistance back here from the peak here during the release of China's efforts to build its own digital currency, to push blockchain into the masses, and that spawned a big spike in Bitcoin. But again, consistent resistance range here, as well as back over here multiple times. All right, so this was pretty expected to some degree, and I think we'd had a really nice rally, and many of us probably got a little too caught up in the positive bullish nature of Bitcoin. However, though, we've got what's coming up, and that's the halving event. We've got that here in the weekly chart, right? We're not overcomplicating it. I'm sorry, I don't know why my chart's taking a second here to load, but we're not overcomplicating it. There we go. And we're looking for this event to hopefully have, again, an effect on Bitcoin's price going into the second quarter of 2020 and into the third quarter of 2020 as momentum really starts to kick in from the change in the available demand for cryptocurrencies like Bitcoin and the supply, right? So the supply getting cut in half, the sell side pressure being reduced is going to lead towards this breakout, likely coming out to the upside here, right? So again, our time frame here in the short term, again, a lot of people are going to be scared about, the daily or weekly moves here in the short term. But my whole goal here, again, if I was to give you guys a very rough prediction here, I'm going to go ahead and give a pessimistic case scenario as well. Let's say, for example, we come all the way back down to this line of support here at 8,000. Yeah, that would suck. It's another $1,000 drop on Bitcoin. Could happen, but we don't know if it's going to happen, right? And again, I think what's going to happen is you're going to bounce through here, roughly speaking, over the next few days. And once the halving really starts having an effect, that's when we're going to start climbing up. And sometime in late 2020, we're going to come back up to the previous highs, probably face a little bit of resistance, and then move higher into the next cycle in 2021. That's a very reasonable case to be made. And again, it's one that's patient here, that's saying that we're not really going to be getting back above 14,000 probably until the summer. And that's why I think we're going to start seeing a little bit more risk taking in altcoins first and foremost. And again, That's why I'm positioned where I am. But I think in this case, while Bitcoin pushes sideways, there's still room for altcoin dominance to continue growing. And what's going to happen here, we've had a nice climb back up in a lot of the gains for altcoins. What I think is going to happen is we're going to hit resistance at this point, right? Where we had support previously and where we broke it. I think this is going to become resistance and we'll cusp right back down and continue on to the downtrend. But we'll have to see. If it breaks through that, then I might have a change of opinion and look for maybe a higher level of resistance afterwards. Anyways, want to go ahead here, take a look at equity markets and just talk a little bit about the price action we're seeing and why it's significant. We had one of the biggest point gaps. If you want to take a look at it, I always like to stay in percentages to be fair, guys, because if a market declines 5% back in 1980, or drops 5% here in 2020, I like to look at percentages because I think that's a substantial measure of we have lost an X amount of percentage of the entire valuation of a market, and that kind of really kind of emphasizes the fair significance of those both of those price moves. But to be fair, guys, I want to be clear in saying that this has been the biggest point drop we've ever seen in the sense of the Dow Jones, and I think also in the S&P 500 and the NASDAQ. I don't want to make that claim, but I do know the Dow Jones had its biggest point drop in history in a single day. So I think this speaks a little bit to the significance of the sell side. And it's not just that we had a downward day in the market. We have had 4 consistent days of decline in price, and one of those being a massive gap between the second and third day, a huge gap in decline, closing down on an entire month's worth of price action. Excuse me, actually the last 2 months worth of price action. Now, if you go on Twitter, and I recommend you guys follow me just to keep up to date with these kind of things outside of the YouTube videos throughout the day, follow me at Nicholas_Mertner. You can find that on my YouTube channel in the top right. Long story short, I tweeted out basically the significance of this decline, that we had lost over $4 trillion in valuation throughout these 4 days here, right? Not even a full week. And we've still got, today, Thursday, and Friday for markets to move even lower. And so far, we're seeing that across the board on futures. I want to go ahead and make sure we get U.S. futures down here. Really only down a fraction of a percentage right now. So I guess this is what happens sometimes is futures markets will not change too much until the market gets going, until the algos start trading. In that case, we usually don't see too much of a difference. But global markets are giving us a pretty big hint here from indices in Russia and Singapore and South Korea, as well as a lot of other indices from countries like South Africa. We're starting to see, again, a sell-off across the board here. Things aren't relatively positive. There's a few countries here trading up, mostly Euro stocks, from the DAX to the Euro Stoxx 50. We're not seeing too much positivity, though, compared to the negativity. And, again, we could focus on global markets, but, again, to just kind of showcase the sheer significance of this, take a look at the weekly here. Right? This is the NASDAQ. Huge point decline here. Right? Almost nearly 1,000 points. Actually, no, it is about 1,000 points here, roughly speaking, right? Just if we open down where we're expecting in the futures, it'll be officially 1,000 points down for the NASDAQ in practically weeks with the price action. If you take a look here at the FANG aggregation, if you add together Facebook, Amazon, Apple, Netflix, and Google, right, we're taking the big tech plays. This is the chart you get here, going from a range of 4,600 down to 4,200, a 400-point decline. Now, to just kind of put it in perspective, we have not had a week where we've had this big of a decline, 6.2% across the FANG stocks, since back here in December of 2018, where there was peak fear in equity markets after we had already had a really stark sell-off here. So if we're already getting one of the worst weeks we've had since back here, right, where we had a 10% decline back here in December of 2018, what's to come? I mean, we still have another 2 or 3 days here. We have Wednesday, Thursday, and Friday. And then we've probably got another few weeks of pullback. Along with that as well, we also have individual stocks that we should take note of, like Tesla, that have, again, been kind of showcasing the irrationality in bull markets as we've had a massive short squeeze on some of these big tech plays. And we can see now Tesla's trading at around $150 billion in valuation. Now, I love Tesla as much as the next guy. Again, it's not a personal ridicule of the company. It's a ridicule of the fact that this thing is trading at $800 a share, or a valuation of near $150 billion, just because it started to turn a profit. And that's not something that is a good sign of a market where there's fundamental value, there's rationality of any degree. The valuations have been able to hold up over these last 2 weeks in this range gives me pretty grave concern that we're going to be getting a correction quite soon, and that a lot of the kind of excess of retail volume or everyday mom and pop traders who have been buying into markets at record levels, again, is showcasing clear signs that we are at the peak of a market, that we've had the same kind of irrationality that we've seen back during the dot-com era, where prices just keep going up because people are speculating to no avail on the price of random stocks and equities. Now, I want to go ahead and talk about the main thing that's causing this. It's obviously the fear of the coronavirus. We're starting to see a little bit of contagion across the world. We're starting to see higher numbers in South Korea, Japan, countries like Italy. And eventually, it's going to probably come to other countries like the United States. It's going to come to countries like Canada. It's going to come to Mexico. It's going to come to a variety of countries throughout Europe, outside of the levels that it's already reached right now in countries like Germany and France. So, this is going to hit pretty much every corner of the world. I don't doubt that for a second. But it's a question of how bad, right? In the sense of the fundamental case, guys, I have still stood pretty strong in my opinion, right? I have not downplayed the economic impact this is going to have. It is going to likely spawn a recession of some sort because it's already stagnated China's entire import-export economy. It has started to therefore freeze a lot of the global trade that's been going on across the world and therefore slowed the global economy. Companies like Apple have made it very clear that they've had to shut down factory operations, that they are not going to meet quarterly earnings expectations, and therefore consumers are not buying as much as well. So it's a negative on both sides, on production and then also on the side of consumption. Now, if we take that into mind, though, and being fair, again, I don't want to speak so much on the severity this is going to have on a global scale and the result of like deaths, in the sense of comparing it to a lot of other flus out there or viruses, right? So again, we'll have to see how that contagion spreads. I've talked about that being the main thing we need to look for. And I'm happy to admit that I might be wrong in the sense of understanding how bad this might be in the next couple of weeks, right? But right now, the major thing we can hopefully all come to a consensus on is that this is causing a big shock in the sense of global trade and global business. And because of that, if we can get one or two quarters, if we happen to get one or two quarters where GDP is turning negative because of this, and where economic growth is finally stagnating, in this case, it's going to spawn a recession. And it's going to likely be the reason why equity markets tailor down and likely have a 40 to 50% retracement from their current highs. Plain and simple, right? We're not overanalyzing it. It's not overselling it. And it's not trying to build the idea that this is an absolute global pandemic, right? But at the same time, I do understand the fears from people out there. I don't think there's anything wrong being prepared for something like that. I don't think there's anything wrong with assuming that that might happen. Right? I just need to see much more parabolic growth, because right now the numbers have been relatively stagnant here. If we take a look at the most recent numbers here, right, overnight we only gained a few hundred cases, right? So that's, again, the growth here has turned more into an S curve, and that's why I'm not too excessively concerned. Now, if growth globally outside of China continues to spread and it can't be contained, that's going to be another story. We might start another S curve where we really start to kick into higher cases. And I don't want that happening. I've stressed that a lot. But again, it could happen, guys. We always keep open to it. Now, there's a few other things as well that are causing a negative weight on equity markets. First thing here is the central bank balance sheet, right? Global central bank balance sheet here that takes in the total net asset changes here over a yearly change has actually flipped negative here. So we've actually gone down a few $100 billion in liquidity injections. So central banks are actually repealing basically any kind of quantitative easing here over the last few months. And you can see here a direct correlation where that started to stagnate, where we had, again, a continued rise here, a stop in the sell-off here. And this is just a good chart just to explain it a little bit better. I'll go ahead and zoom in. This chart is basically demonstrating the S&P 500 and the total assets of the Fed, the European Central Bank, and the Bank of Japan. And what it showcases is that as we started to decline decline quantitative easing, equities get real shaky. They start having a sell-off. And we had our 30% pullback back here. But as soon as central banks started to re-inject or stop the sell-off, and then also we had a lot of measures that the U.S. took to keep stocks up, we projected stocks right back up. And central banks made it very clear afterwards that they would continue to fuel the rally. Well, now that we're starting to turn over here and have a net negative for these central banks, as well as the People's Bank of China, equities start selling off. And it's not happening at a good time because we've got fears of the coronavirus, which is already going to stagnate global growth. So you've got these going. And then also, you have a general decline in stock buybacks across the board. This has been the thing that's been fueling the equity rally. Now, stock buybacks in Q3 had a general actually increase from Q2, but annually speaking, we're seeing a general decline. I'll show you the broader chart here real quick. Here at the top of the chart. So we haven't gotten to Q4 statistics. That's what I'm really interested to see. But we can see here that annually we're starting to see a general decline here. Look what happened. Right when we started to see that decline in stock buybacks, what happened? We had the 2008 recession. Dividends are still keeping relatively strong, but they usually have a delayed response. They didn't really get a serious cut until after 2008. If we take a look, though, at the individual sectors, though, the only sector that's really acting as a net positive is communication services and financial services. Outside of that, energy, consumer staples, consumer discretionary, industrials, information technology, some of the big things that have been carrying markets forward, nada. They're seeing declines here in stock buybacks in the billions of dollars. So this is starting to, again, have an effect. And another thing to take into mind is that throughout January and February, right, we've still been in a buyback blackout period. So we're still at a point where 10% of companies cannot do share buybacks due to earnings. Luckily, we've gotten through the worst of it. So this might actually be a kind of bullish factor here. But an important thing to note as well in the sense of companies that can't go through stock repurchases during this really tough time in equity markets. So all in all, right, we've had this over sense of rationality in equity markets. We have peak amount of retail investor participation making up volume in trades and markets that we've seen in the last decade. We have not only had that, but we've also had a significant sell-off to follow. Markets have now declined past, the S&P 500 has gone below its 100-day moving average. And again, this is not only a key level of support, but it's very close to testing its 200-day. So if we see a breach on the 200-day moving average, this is going to certainly set a tone here that markets are probably setting up for a recession. After this already parabolic rise that we've seen here in equities, having some of the best years in a row that we've had for equity markets, 2019 was a massive year, right? At the beginning of 2020 only fed into that continued irrationality. Well, take a look at gold. Gold's holding up very nicely here on the daily. Take a look at the weekly. The trend becomes even more clear. Gold is holding up in this time of fear. Silver, again, pulling back here the other day, but if we take a look at the weekly, again, still setting up higher significant lows, and on the monthly chart, the trend becomes even more clear. We've talked about this a lot here on the channel, guys. Silver has a beautiful chart here showcasing that it's ready for a long-term cycle. And then, as we talked about, I just want to re-emphasize it, Bitcoin, as much as you might be seeing Bitcoin turn down here in the sense of the last 24 hours, the last few weeks, do not let the time frame make you lose track of what's to come. Do not let it, blind you from the fact that we are just a few months away from the halving event. That once we break through this line here, this this logarithmic wedge here that we've been building up into ever since back here in 2015 and 2017, once we break through that and the supply shock hits the demand that's going into assets like Bitcoin, I can tell you that I'm quite confident I'm going to be happy to be exposed into commodities like gold and silver once I finally build those positions, and also into cryptocurrency assets. So that's my general stance, guys. I'd like to know what you all think about that in the comments down below. But one thing I want to emphasize as well, if you guys are just getting started in cryptocurrency markets and you really don't know where to get started, you guys can always check out eToro. This is one of our sponsors here on the channel. Now, for eToro, what's nice is they do have a copy trader feature. So if you want to get exposure to kind of my broad positions in the cryptocurrency space when I'm exposed to altcoins or Bitcoin more specifically, you can do that. You simply just have to sign up on eToro. You can view my stats real time on my performance. You can see my portfolio holdings between, what I'm holding right now. I'm holding Ethereum and Litecoin. And also you can see a chart of performance. And if you're using this in another profile, I'm sadly signed into eToro right now, you can actually click the copy trader button here that will allow you to be able to position yourself alongside myself so you can buy at the exact same time that I do as well as at the exact same price. So If you guys are interested in that, check out the link down below in the description for more information. But that is going to be it for the video, guys. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are. I know the markets have not been too kind here over the last few days, but again, we're still way above from where we were back a couple of months ago, or really about a month ago in this case, if you really think about it in the sense of time perspective. So I think we're still in a good position. It's nothing to fret about, and I haven't traded anything excessively. I'm still keeping my positions for the most part. I'm excited to see where we're going to go here over the next couple of months. That's my time frame. I'm looking at 2020 and 2021, and I hope you are in the same boat as well, looking at the longer term time frames and not getting caught up in the day-to-day noise. I can tell you guys it's going to lead you towards a much more successful track record of investing or even trading if that's what you're doing. All right. Have a great day, everyone, and I'll see you all in the next video. Stay tuned.